Hey, what's going on to the AMC stock family? I do not want to waste any time in this video, so we're just going to go right ahead into AMC, and we see that we are already trading at around $15 per share, as right now in the after-hour market, $15.02 exactly. But here's the deal, everyone. I do not want to be talking about AMC just yet first, because what's at stake here, the reason why you see such a drawdown in AMC has nothing to do with AMC specifically. And I'm sure that at this point, many of you guys understand this as well, because you guys are probably wondering, what is the fundamental catalyst, right? What is catalyzing AMC to have such a steep decline? And your answer is right over here. The IWM, we're going to talk about this one first because AMC is heavily comprised in this index fund, but lo and behold, we see that this index fund has just been breaking levels like none other. This did happen previously. The IWM is pretty volatile compared to other index funds, especially around 2020, but we all know what happened in 2020. And so we take a look at what happened after that, and after this insane drawdown, even steeper, just a complete downside. Honestly, you can even say that it is linear at this point, just straight line. And so then let's take a look at 2021. 2021 was much, much better. It went to the third line at most as its drawdown. The third line as its most, right? And then we go to 2022. As soon as we start the year, we are breaking all of these levels. We even broke the last one. That is what is so important about this market. And some people are even blaming themselves, saying, why did I do this? Why did I do that? And how could you blame yourself, though, when this is just the current environment of the market, right? We can also understand that it is not individuals' faults, right? You can blame yourself as much as you want, but the truth is the market is just doing what it wants to do right now because of macroeconomic fears, because of macroeconomic fear, uncertainty, and doubt. So that's why it's just the S&P 500. These are what the financial advisors would advise you to buy 10 years out from now, 5 years out from now, 15 years out from now, right? This is considered the just buy and hold forever. Well, you see over here that this is supposed to give you an annualized return of around 10% per year. That's what a lot of people allude the SPY to. And then, as I just stated, you see that in the first month of January, we are down and we have already corrected. If it's not an exact correction, which would be around 10%, it is definitely at least 8%. And it has already went to almost one of the last signal indicators, or at least for this chart, right? There are thousands upon thousands of signal indicators that many people can use, but these are the ones that I really like because in the past it has correlated very significantly and has actually been very, very tenacious to the SPY. We can see, let's go to just a random year, right? Let's go to 2017 and let's see what happened. So 2017, we start off, we're right before 2017, I should say, so 2016, around the winter. Okay, we go to the fourth line. Then after that, we go to the first line, then we rebound. We go to the first line, we rebound. And then we go down to the second line, we rebound, right? And we can also use these indicators for, let's say, Tesla. The reason why I'm not using AMC is because AMC, the way that its environment and the way that people have been reacting to AMC has not yet been very steady, right? In some days, AMC will go up 15% or 20% or even 40% on the day. And then other days, it'll go up or down that 20%, 15%, or 5%, etc., etc. You guys understand what I'm trying to say? It is very volatile, and there is yet to be concrete statistics, concrete data to really support anything. And the same goes for Tesla. It is extremely, extremely volatile. And then after this, we're going to take a look at Apple as well, and then we're going to go ahead and head back over to AMC. So we could see Tesla, if someone had just hypothetically bought at the first indicator, you could see that as a trader, right? Let's say pretend you were a trader, you buy the first line, okay, and then you decide to sell it, let's say not at the highest of the highs or the peak, but you would definitely get some sort of a return from right over here. And then you could do that same thing again, buying it right at the line. And then you would decide to sell it for however much you would like. Then again, you could buy it at the line, sell it for as much as you would like, buy it again at the line, sell it for as much as you'd want. And sometimes, again, it doesn't always have to be the first indicator, there are many of them. So you could decide to buy at the third line, what happened after the third line went up, or the fourth line, and here is what happened last year around the same exact time, around the springtime. You go, and sometimes the returns will not be imminent. It's not going to happen maybe just a few days from now. It might take a couple of months, which is exactly what happened. And as soon as it hit the fifth indicator, Tesla went from 500, let's just say $600 to $1,200, more than that. That was a pretty long explanation. I'm going to show you guys one more example just to show you guys again one more time, indicators are being broken. So let's take a look at Apple, which I think Apple saved the market today. I think Apple also saved the market yesterday with its earnings, and we have this massive wick. We have this massive candle bar actually, which I think if Apple went down yesterday, the market itself would have also just plummeted as well. Yesterday actually was tech earnings, and I think without Apple having that massive beat, and also it doesn't matter whether Apple even had a beat or not. It's really dependent on what the hedge funds wanted to do, what the billionaires want to do, which also brings me to my next point about what the billionaires are going to be doing with AMC. So before that, remember I said I want to take another example with these lines. We all know what happened in 2020. So after that, if you just bought Apple, first indicator, you would have made a return. Second indicator, you definitely would have made a return. And then fourth indicator, you would have made a return. And then fourth, again, you would have made another return. Third, made a return. You guys get what I'm trying to say. Let's not waste any more time. Let's go ahead and go on over to AMC and what the billionaires are going to be doing, in my opinion. Now, this is going to be a bet. So I think that the billionaires, what they're going to end up doing, they see that AMC has broken all the indicators as well. However, if you see over here, if you had just bought with the indicators, it is pretty tenacious, even though AMC is extremely volatile, right? So even with this volatility, could have bought at the second line, you would have made a return. Could have bought at the third line, made a little bit of return, but at this point, we head on over to 2022. Remember, AMC has not been well founded yet because the way that it's reacting, the volatility, has been pretty new. And so in 2022, that was not AMC's fault, right? It's a new year. AMC can't do anything about the new year. And so what happens as soon as we get into 2022? Indicators just keep on breaking. Before that, though, what happened? AMC did follow the indicators. AMC was not really that volatile. You see, it used to be at around $35 and it would just stay there. It would stay around $20, $35 and just stay. However, volatility has been pretty new. And so 2022, as I said, everything breaks. Now, as for the billionaires, I think that they're waiting. They're waiting because they know that AMC has that volatility and is not going to be going away. Some growth stocks, let me just tell you, they're not going to have that rebound. I'm actually going to be letting you guys hear about this interview, and the person getting interviewed states the same exact thing. Some growth stocks will not have that insane rebound. But in my opinion, and remember, this is the bet that I'm going to be taking. I think that AMC will be one of the few companies, one of the few growth stocks, alongside with GameStop, because they are parallel. They usually do follow with each other. I think that these two are going to have rebounds in the future, and I'm going to be stating the date in just a few minutes. And I think that also it is going to be very fast as well. However, I don't think that this spike will be accompanied immediately. I think that it will definitely take time. And as for the time, I think it will be until March or February. I'm going to be pretty much waiting until March to see what ends up happening. That is quite a bit of time from now, but it is near term compared to the long term potential that I see for AMC and also GameStop, because I think that after March, I think the S&P 500 is on track to go to around $500 this year. Let's go ahead and take a look at what SPY is currently at right now. It is currently at $441 per share, going all the way to $480 or $500. That would be an immense return for someone that is holding an index fund, because remember, the annualized return is 10%. Imagine what is going to happen about all the stocks, all individual equities, when SPY goes back to 480 or 500? That's the question I want to leave you guys with. With that being said, take a listen as to what this individual has to say, because it is very parallel with what I'm thinking is going to be happening. I don't think that the worst is yet to come yet. I think that there may be a little bit more volatility. Sure, a lot of equities could decide to go up in the future, right? But I think it is going to be temporary until we get closer and closer to seeing more macroeconomic what is going to happen, what the Federal Reserve is going to say, what Jerome Powell is going to say. We are close to a bottom, but as I just stated, hopefully this isn't getting repetitive. I don't think that the bottom is here just yet. So as we get closer and closer to March, it'll be interesting to see, are the shorts going to start covering, and we do see some of that move into the upside, and then we decide to go back to the downside because they decide, okay, the billionaires want to start selling more AMC and more AMC, because at the end of the day, I don't think that a lot of this is retail. In the beginning, it was definitely a lot of the hedge funds and the billionaires. Maybe with a mix of retail, it got even worse, which is why we see maybe that steep decline. In the future, when are the billionaires going to start buying? And when I see unusual activity going on, I will make sure to update all of you guys so we can understand when the bottom is going to be here. You guys know my opinions as to when I think the bottom will be, sometime very soon. May just take about a month or two left. This was long, so just take a listen to what this individual has to say.
The buybacks are going to start now. We've had the damage. We've had the technical damage. Not every company is a good company. Not every company has the balance sheet to support its share price. So I don't think you're going to get this rebound where all of these growth stocks that have been annihilated just automatically get to go back to their highs. It ain't going to go that way. I think the quality names, I think the companies that have these fortress balance sheets, and there are very many of them all throughout the index, are probably the best bet. Even if you don't get the biggest bounce out of them, you know that they will have the wherewithal to come in and do some buying. And I think that that's really where the rebound can stick. It's going to be much tougher for that rebound to stick. And I own some of these companies that were SPACs, 6 months ago. They have no support. They don't have enough cash to do buybacks. They're too small. I would curb your enthusiasm on the comeback there. It's going to become a little bit more bifurcated, in my opinion, going forward if we have a recovery. I think it's going to be narrower than a lot of people would like. And that's not going to be fun for people that have loaded up on unprofitable companies, but that's just how I see it.